Hi, this is Paul Hoyt, and welcome to today's Office Hours session here on Monday, September the 8th, 2014. Our Office Hours presentation is a relaxed, informal free mentoring program that we do almost every Monday at noon Pacific time. This recording is going to be available online along with many previous week's recording, and we archive all of them in the members area. The reasons we do this is because being a successful small business owner, an entrepreneur, can be a great experience, but it's really tough. You need education and training and coaching and consulting. I also want you to get to know me, because when you get to know me, you'll know that I really do care. Not only have I been around the block a long time with almost 50 years of business experience, but I actually care about people who are starting and growing their businesses. I care about CEOs and entrepreneurs, because I am one. Precious members of my family have been one for their lifetime as well, and I know what fine folks you are. Our agenda is usually the same. We talk about an in-depth discussion of a business success principle. I offer some closing remarks, some special offer, and an invitation to next week's session, and then we get into questions and answers. First, we like to have questions and comments on the subject of the day, and then we open it up to darn near anything. Today's presentation is going to be called Batters Up, or Batter Up, Pitching to Investors. As always, we try to relate the subject matter to one or more of the key performance areas of business that I defined in my book, The Foundation Factor, published in 2004, and now has become a cornerstone of the way that I talk to CEOs and entrepreneurs about the job of being a business owner. This particular case, pitching to investors, is the primary responsibility of leadership. The number one business success principle in the area of leadership is taking 100% responsibility for everything that happens at your business. And certainly raising capital, creating the capital offering, and pitching to investors is the job of the CEO. It's the job of the president and the CEO to do that. It also has a lot to do with the area of financial management, because in the key performance area of financial management, we focus on making sure we understand how much cash is going to be necessary to grow the business, and we focus on ways of getting that cash, which could be, the founder's money. It could be loans from banks or other financial institutions, or in the case of our conversation today, it could be on outside investors to the company. And whenever you're pitching to investors, it's always all about sales too. Understanding best practices in sales, what a sales cycle is all about, how to build trust and rapport and gather the interest of your prospective investors is really important in the sales call itself. We address the subject of pitching to investors and talking to investors a lot with Office Hours number 18 on the 6 stages of raising capital, which I think was probably, in the first part of 2014. I didn't look up the exact date. But in that presentation, we talked about 6 stages, the first stage being the founders stage, where it's the founders themselves that contribute money to the growth of the business. Second stage is family and friends. The third stage is friendly angels, or professionals who are known to you, not quite friends, but professionals who may be outside investors. Fourth one is other angels, which are to those people who have not previously been known to you or may have a distant relationship. 5 is angel groups, and 6 is funds and institutional investors. And we're going to be talking about pitching in all of these different stages of business today. I'm not going to repeat, everything that we talked about in that presentation on the 6 stages of raising capital, but there are a couple of points that I want to make because they're very relevant to pitching to investors and the subject of today. The first one is this slide that I created that talks about what the emphasis might be on a business relationship versus a personal relationship. And as you can tell from the graph, when somebody starts in as a founder of the business, it's typically 50-50. 50% is them wanting to be in a business and being a founder of the business, and 50% might be on the personal relationship that they have with you. When you're raising money from family and friends, well, their decision as to whether or not to invest in the business is typically 80 or 90% on whether or not they like you and want to support you, and maybe 10% on business. But then it starts really moving heavily towards the business. so that when you're talking to angel groups and when you're talking to venture capital funds, it's all about the business. It's not whether they like you or not, or even like the business or not. It's whether they think that they're going to be able to get a return on investment, because they're really looking for more progress and sophistication in the offerings that they give. The other real important concept that we talked about in the presentation on 6 stages was that concept of progress and sophistication. The further you get into the stages, the more you get into people who don't know you and are focused strictly on return on investment, the more they're looking for progress and sophistication in your pitch, in your offering. So that means the documents that you present to them and your presentation quality, which is the subject of today. It's the team that you have in place. It's market traction, if any, that you have. And it's about your plan to make money and grow a valuable business. And it's about anybody else who's invested in your business. So as you grow your business, understand completely that the pitch that you deliver and it is really dependent upon the stage that you're in and the audience to which you are pitching. Because people have different motivations. There's different types of investor motivations for individuals, for professional investors, and even for corporations as well. I want to talk about each one of those 3 individually for just a minute. Individuals, especially in the friends and family stages and in the friendly angel stages, may consider investing in your company just because they want to support you, because they care about you, and that's one of the things that they do with their friends, is we support them in their mission, in their purpose, in their ventures in life. They may do it because it's fun. I think that there are some individual investors, even angel group investors, or angel investors that have some percentage of money that they set aside every year for just having fun. Instead of going to Vegas and putting their money on a roulette wheel or a blackjack table, they put their money in a business because it's more fun for them to do that. They get to play the game and get to participate even in the inner circle of the business as the business is being grown. And they may also have a strong interest in return on investment, but that's more of the angel investors who are not known to you, and especially those that participate in angel groups, may be just as focused on the return on investment as they are on supporting people or having fun. And in the worst cases, by the way, people may invest in you because they're interested in controlling you in some way. So you be cautious about that. In the book that I wrote in 2010 called The Capital Coaching Program, that's one of the subjects that we talked about in motivation of investors, is that some of them may be interested in exercising some control over the business itself or over you personally. So my advice to anybody that senses that there might be some of that shadow energy associated with a check is to not accept the check. You don't have to accept every check that is offered to you. And if you sense that it's coming with some strings attached, it might be better for you to leave that check uncashed. That can be a pretty wise decision. Professional investors may invest in you because primarily of the return on investment, but they may also be looking for a strategic advantage. For example, one of those strategic advantages might be a roll-up strategy. A roll-up strategy is a term that we use with private equity groups mainly. Private equity groups who are interested in, say, investing in or purchasing several different companies so that they can gain some strategic or operational advantage through the interaction of those different companies. So they may be having, in addition to having a strategic advantage and a return on investment strategy, they might have a long-term play in terms of a roll-up strategy. Corporations are pretty interesting. I'm not used to pitching into corporations, but with the pitch that I did a few weeks ago, we did have a lot of corporate people there who are very interested in learning more about the business. They're interested in a strategic advantage that can come from an investment in a company. They may also want to invest in a company because of competitive buffer. A competitive buffer means that they invest in you because they don't want their competitors to invest in you. In fact, they may have some sort of exclusive relationship that they're looking for as both a sponsor and an investor. They can't do anything to have an exclusive relationship as an investor. I don't think that it's legally possible to do that. but they certainly can as a sponsor of your company. So they may invest in your company as both an equity investment and as a marketing sponsor with you. Because what corporations found is it's the cheapest form of research and development. Best practices in R&D is that you have hundreds or even thousands of little R&D projects going at one time. And corporations can't do that all by themselves. So oftentimes they will look towards the innovators out there, the entrepreneurs, the people that are inventing new products and services and bringing them to market, and invest a little bit in them, either in terms of a sponsorship or an equity participation, because it becomes very inexpensive R&D for them to invest in another company's research efforts rather than having their own research labs in place. I want to talk primarily for the rest of the day about some pitch events that I have gone to. It was my pleasure to go with a client to the Plug and Play incubator here in Silicon Valley in Sunnyvale, California, and pitch twice a couple of weeks ago. We'll talk a little bit more about the details of those pitch events, but in this particular case, this was a type of pitch event that I call private and formal. Or there were also private and informal pitch events that you may give, typically in the early stages and typically to family and founders and friends, where we don't stand up and give a PowerPoint presentation in a formal manner in front of a room with a laser pointer and a microphone and a spotlight and all that stuff. This may be just a one-on-one conversation that you have with a friend, where you may go through a presentation or you may just talk about the opportunity, but it's very private and it's very informal. You can also have private conversations, one-on-one conversations with experienced angels, and maybe the first presentation with a venture group, but usually not. Usually the first presentation with a venture group or an angel group is much more formal to that. But you can have private one-on-one conversations with experienced angel investors as well. And you can have group presentations, very formal presentations for the pitch events. Because, and that's what I'm going to talk about mostly today, is an angel group pitch event like the one that I went to a couple of weeks ago. The process of getting in front of a bunch of angel investors at an angel group pitch event or at a venture capital pitch event is first that we have an application. And then if you pass the application, and by the way, oftentimes that application is send me your pitch deck or send me your business plan, because they don't allow everybody to pitch at their events. Just to give you an example of some of the odds, I talked to some angel investors here in Silicon Valley that see 2,000 to 4,000 business plans a year. They have 20, they have a private one-on-one meeting with about 10% of those, or 200 to 400 private one-on-one meetings. They may invite 20 to 40 people to pitch at 2 pitch events that they have per year, typically with 20 people at each pitch event, and then they only invest in 2 to 4 of them. So here in Silicon Valley, it's all a numbers game. It's a numbers game of about 1,000 to 1 of your opportunity being funded at the venture capital level from any one venture group. It's typical for people to pitch in front of 8 or 10 or 20 different venture groups, which accelerates and increases their probability of success a little bit, but still the odds are pretty slim of getting this preliminary pitch meeting, much less being able to graduate from that into a more formal pitch event. Because after they see your application and after you have the preliminary pitch meeting with them, it's either a go or a no-go. They either think that your business might be attractive enough to some of the angel members or professional investors that are going to be participating in the pitch event or not. And if you get a no-go, then you have to go out to other venture groups and other pitch events to see if you can get the opportunity to pitch. At one of these pitch events, there are typically dozens of companies pitching. And each one of the presentations may be from 5 to 6, maybe as long as 7 minutes long. And typically thereafter, it's followed by a 2-minute questions and answer period. And the panelists or the judges or the investors that are at these pitch events typically meet together for 20 or 30 minutes after the pitches themselves to discuss all of the different pitches that they've heard and ask questions and see who might be interested in having further conversations with the folks. So the time that you have will be dependent upon the number of people pitching. So for example, if you have a dozen people pitching over a couple of hours, you may get 6 or 7 minutes for your presentation and may have, a 3 to 4 to 5 minute questions and answer. But the pitch event that I participated in a couple of weeks ago had 22 different companies pitching. So we each only had 7 minutes, 5 minutes for the presentation and 2 minutes for questions and answers. They split us into 2 hour-and-a-half long sessions with 15-minute break in between. So you had to be really on your game. And to be on your game, it means we're having a really high-quality pitch. And I will talk about the 11 different sections that you may choose to have in your pitch to these professional investors. The first section is the attention grabber. Then comes information on your management team, information on your advisors and members of your board of directors, information on the market size and the opportunity that you see and the products and services that you are bringing to market, information on the progress that you have, the revenue model that you've got in place, any sort of preliminary financial projections that you might have, and the request itself and information on any sort of exit strategy. I'll say this a couple of more times, but every pitch that you have does not have to have all 11 of these components. I'd like for you to know what the 11 components are so you can decide whether it's important to include that component in this particular pitch event, whether it be a private and informal event, a private and formal event, or a more public pitch event like the ones that I had a chance to focus on. So let's talk a little bit about each one of these sections individually so you can get what's in them. The first one, and I think perhaps the most important one, is an attention grabber. It's a compelling headline about why they should pay attention to you. You can make it dramatic or funny, but you need to get their attention. And your passion and statistics are very good for that. Just this morning, by the way, I had an opportunity to work with a client, a brand new client that I picked up yesterday who was going to a pitch event called TechCrunch here in Silicon Valley. He texted me at 9 o'clock this morning and said, "Paul, I need your help. I'm going to have an opportunity to talk to Mark Cuban of Shark Tank investor fame and the owner of the Dallas Mavericks here in a couple of minutes. What should I say to him?" So we spent a few minutes texting back and forth, and I gave him a few headlines that he could use with Mr. Cuban to try to get his attention. And I was really gratified when he gave me a text back a few minutes ago to say it worked well. He would have never gotten Mark Cuban's attention at all if he didn't have a compelling attention grabber headline. So for many people, this is the absolute most important thing, because if they're seeing 15 or 20 different investor pitches in the context of a 2 or a 3 hour meeting, you got to get their attention really quickly. So this can also oftentimes be the most important part of any sort of investor presentation. The next one that I recommend is the management team, where you list the CEO and the management team and the personnel by name and show any sort of previous accomplishments that they've had that are relevant to this particular business, because we really want you to know that you have a track record of success here. And summarize the number of years of experience that people may have in this field. Because oftentimes investors will say that it's the management team that is most important. They invest in a concept first, and then it's really the team that they invest in. Ideally, of course, they want to know that you're a serial entrepreneur and you've created many, many businesses, and with those businesses, you've sold a few of them and given your investors a positive return. If you haven't got that kind of experience on your team, then you want to make sure that you at least talk about the years and years of experience that your management team has in place. Next comes the advisors and directors, which are members of your board of directors with their qualifications and their experience. Any attorneys, marketing support team people that you have, strategic planners, business consultants like myself, industry experts who are on your team, and you may also include alliance partners. because again, the professional investors know that it takes, just like it takes a village to raise a child, it takes a big support team in order to get a business launched, and they want to make sure that you're not doing it by yourself. The next section that you may want to address in your pitch is on the market size itself, with aspects about the market to make sure you understand the market and the industry that you're in. You may want to review changes in market share, leadership position, the players in the market, etc., that show that you understand the industry and the market, and provide numbers, for the target market that you have and for potential buyers and how many of them that you expect to be able to reasonably address and sell to. I did an office hours presentation some number of weeks ago on the lean startup methodology, and in that we talked about a couple of terms like the total available market and the service or the served addressable market, which are important to you as well. If you're an adherent to the lean startup methodology, which is real important, by the way, if you are ever able to make a pitch or want to make a pitch here in Silicon Valley, that language has become very important. You want to include the language like the total available market and the service or the served addressable market in your presentation, which would demonstrate not only that you understood the market, but you also understood lean startup methodology terms and practices too. After you've talked about the market, and hopefully it's a big and expanding market and getting bigger all the time, you want to talk about the opportunity that you see in the marketplace, which is what is needed, what is the pain that is strong enough that will cause people to buy things, and particularly buy things from you. This is where we talk about the customer problems, the nature of the product and service opportunities created by those problems, and how your competitors are not addressing the problems that you see in the marketplace. And the way in which you are addressing them comes in the next section on the products and services. This is how you uniquely solve problems or give consumers what they want. Your distinctions, the things that really set you apart, your innovation. It's your list of products and services, or perhaps your product development roadmap. But this is where you really send home the point that I understand the market, I understand the problems that are in the market today, and we have a strong list of products and services that are going to address an available need, a need that we know about and preferably have proven in the marketplace. And next, here's a section on the progress. These are the major accomplishments that you have that matter when it comes to moving your business forward. And as we talked earlier, market traction is the key here. The number one thing that's attractive to investors is whether or not the dog will eat the dog food. It's whether or not people will actually buy your products and services. Will people really sign up for your website? Will they really watch your videos, buy your products, etc.? The more progress that you can demonstrate, the less risk it is on behalf of the investors. And most investors that I have seen want to see at least a little progress. Some of the early founders and friends and family in the early stages may just invest with you and contribute to the cause because they want to donate to you. But again, as you move up the stages of raising capital, progress becomes much more important. Then some information on the revenue model, which is how you intend to make money, your primary and secondary revenue streams, and how you're going to make a profit. You may actually talk in this section about the cost of delivering the products and services to marketplace and the gross profit that you anticipate from each one of them. But this is the revenue model and how you anticipate making money, which can lead right into your financial projections, which typically in the context of a pitch are just high-level projections with expected sales and perhaps operating income or profits for the next 3 to 5 years. And it's really helpful to have a graph or two here, which might be a picture of the revenues that you have, a histogram or a pie chart that talks about cash flow and break-even, and can be really handy when it comes to seeing the financial projections. Because some people like numbers and some people like pictures. If you have both numbers and pictures here, you'll appeal to people whatever their particular interest level is. The next to last section is on the request itself, which is how much money you are raising, the use of proceeds, that you're going to have. In other words, what are you going to use that money for? And it's important in a pitch event here that you don't discuss the details of the raise. You might say that we're raising $3 million and we anticipate using it for marketing, accounts receivable, for staffing, for product development, etc. But you don't want to discuss the details of the raise. And by the details, I mean the share price and what percentage ownership of the company it may be, and any sort of preferred terms that you are offering at this stage of raising capital. Because that's where it really starts to go over the line from being an information pitch in between being a formal offering. As it turns out, when you talk to securities attorneys, they cringe at the idea of having a pitch event where there's a lot of people in the room who are not known to you, but yet you're talking to them about the business that you're building and the capital that you are raising. They cringe a little less when you say that we're not exactly talking about share prices or percent ownership of the company or any of the preferred terms, but they still don't even like the idea of doing that. Nevertheless, pitching in front of angel groups has been a cornerstone of raising capital throughout the entire United States for decades or so. So it is an acceptable practice, even though it kind of is in that gray area of making an offering to people that are not known to you when you have a private offering. The assumption is that if people are at an angel group or at a pitch event, that they are accredited and very sophisticated investors, which is most always true. But you still have to make sure that you're not displaying or telling the details of your offering so you don't cross that line from making a private offering into a public offering. The last section of a pitch that I like to see in there is the exit strategy itself, where you talk about your willingness to be acquired or your willingness and intentions to go public, or your willingness to repurchase some of the shares of stock that people may buy from you. And the one that is probably least attractive to the investors is a distribution of profits, although I've seen many companies do this that say that you're going to get your money back not when we go public and not when we sell the company. You're going to get your money back when we distribute the profits of the companies to you. And that's not attractive because that means that they're not likely to get their money back in all one event like they might if you go public or if you are acquired. If they have to wait as the profits are distributed, that becomes a little longer term payout for them. You might also tell them that they might have an opportunity to sell on the secondary market, which is true, by the way. So for any of your investors who invest in you, after 1 year or so, as long as they are selling their shares in a way that is consistent with the initial private offering, or the employee stock ownership program, by the way, they can sell those shares on the secondary market, and there are companies that will facilitate the buying and selling of private shares, not public shares, on the secondary market. So you may have an opportunity to do that. So bottom line is your pitch needs to be adjusted for the available time, much different as to whether you're doing a 5-minute, real impactful pitch. You may only have 4 or 5 of these 11 different bullet points that you include in your 5-minute impactful pitch. If you have a 30-minute pitch in front of an investor, then you're going to have an opportunity to talk about all 11 of them or 10 of them or so. It's really tailored to your audience. If it's in the founders round or in the family and friends round, you might spend a little bit more time talking on the why you are doing this and how meaningful it is to you to break out and pursue your own dream, and how passionate you are about helping people in the way that you can help people with your business. But in the professional investor stage, you wouldn't put those comments in there because they don't care much about you personally or how much this company means to you. What they care about is how much in return on investment that you may give to them or that they can expect from your venture. As with most sales presentations, it's really important for you to tell powerful stories because people buy via stories. That's the way that we relate to each other, is by story. In fact, there's a whole brand of sales technique out there called story selling, which says that you tell people powerful stories and they become engaged and they want to do business with you. I encourage you to lead with your strengths. which that means adjusting the sequence of the presentation based upon the strengths that you have. So you lead with your strengths, and generally you leave out your weaknesses, or you gloss over them in some way, because you want to have a very positive impact on the people who are listening for your pitch, because you're focusing on doing one of two things. You're either focusing on getting another meeting in the case of a very quick pitch in front of angel investors or venture capital investors, or determining what their particular level of interest is in writing you a check and becoming an investor with your company. If you're pitching in front of an angel group, you're not going to have the conversation about invest with me now. What you're really selling is the opportunity to have a private one-on-one conversation with your potential investors, so that you can explain more about the opportunity and you have an opportunity to answer a lot more of their questions. And with any sort of sales presentation, and certainly is the case with a pitch, you have to practice, practice, practice. Rehearse, rehearse, rehearse. Rehearse your 5-minute pitch, rehearse your 10-minute pitch, rehearse your 30-minute pitch, rehearse your 30-second snap or elevator pitch. Just rehearse these pitches like crazy. And by like crazy, I mean 30 to 50 times, not just once or twice, but 30 to 50 times rehearse them so that you can deliver them in your sleep. You can deliver them when you're tired. You can deliver them when you're nervous up in front of a crowd, which will happen to you, as it happens to everybody that's not an accomplished and experienced public speaker. You know, they get nervous when they're up in front of a crowd. The more rehearsal that you have, the better that you will perform when it really comes time to do so. So here's your homework and your exercise. First, get a securities attorney. Anytime that you are raising capital, anytime that you're preparing to pitch at all, make sure that you have a securities attorney on your team so they can coach you in the art and science of raising capital and coach you in what you can say and what you can't say. I think it's also important for you to talk to a lot of people who are raising capital, especially those who have been successful at raising capital, and watch other pitches. So go to see if you can be a fly on the wall at one of these angel group events. Tell people, like I have done a couple of times, to say, hey, I'm interested in, perhaps someday pitching in front of your group. May I attend one of your angel group events and sit in the back of the room? And oftentimes they will let you do that. You can do it at large-scale incubators or other angel groups, just so you can watch the pitch, so that you can get to understand what's expected from you if and when you get an opportunity to do a pitch in front of that audiences. So develop and practice pitches of various lengths, as we have said. And as always, get a coach or a mentor, somebody that's helped dozens or hundreds of other people develop their pitches and deliver their pitches with you. When I pitched with my client at the Plug and Play Center a couple of weeks ago, I did the opening remark. I did the attention grabber and the headline and turned it over to him to deliver the rest of the pitch. And I think it was very effective. It was effective because we were, I think, the only company out of 22 that had more than one person actually delivering the pitch. And it was effective because, well, I'm pretty experienced in front of a crowd, and I don't get nervous when it comes to standing up and delivering, the first 30 or 45 seconds of a presentation. And that's what I did. I delivered the first 45 seconds. He delivered the next 4 minutes and 15 seconds, and then we did the questions there afterwards. So that's your homework and your exercise. If you're pitching in front of investors, have different pitches available and practice, 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 and get CEO coaches and mentors and other people to participate in the pitch process with you. We're going to open it up for questions and answers in just a minute, and I invite your comments and your questions on the topic of the day and then any other issues that we might have. I invite you to tell me what your biggest takeaways are and what your insights that you've gained from this presentation, and tell me what you're going to focus on. I failed to mention it at the outset of our presentation, but we do have a brilliant business group within Facebook, which all of you are welcome to become members of. Just go to facebook.com/brilliantbusiness and ask to join that group. And that's where we post a lot of information and questions on these topics, on these office hours presentations, and where you can get support from a community of people who are raising capital or building their businesses a lot of other CEOs and entrepreneurs. Go ahead and post your question there, your comments there, and develop a community of support for you. As you get to know me a little bit more, you'll know that I am not like other business consultants. I have three primary distinctions that set me apart. First of all, is I don't want a lot of your money. I think you should spend an appropriate amount of money on consulting, coaching, education, and training. But by appropriate, I don't mean it's all of the money. There will be other business consultants and support organizations out there that would love to get your $30,000 or your $50,000, but it brings me no joy at all for you to spend a lot of money with me and then not have anything left over to spend on the other things that you need to spend money on to grow your business. I pride myself in selling people only what they can use, what they need, and what they can really afford. I also don't want you to jump into the deep end of the pool before you learn how to swim. I think it's a pretty good idea for people to start with a small business idea and gain the education that can only come from being a CEO at a business, to participate in our education training programs that we have, learn great business success principles before they set out to start a fairly small business, and then expand that business and move into a much larger business later on. And I also don't believe that belief and persistence alone will guarantee your success. I really believe that it's necessary to do the work to, as I say in my 5 Choices campaign program, to improvise, adapt, and overcome, minute by minute along the way. So as a consequence, our support services are education, training, consulting, and coaching. And the newest service that we have is called Business Growth Management that we introduced just a few weeks ago. Business Growth Management addresses the 97% of the time that you have to work on your business. As I often say, having a vision, a status, and a plan, and gathering resources can be the first 3 to 5% of effort that you have to put forth whenever it comes to starting and growing a business. The rest of it is all about education. So with our business growth management offering, we're starting now to offer services to help you throughout the life cycle of your business. So with the help of my team with Stephanie and Marcel, we are inventing new ways to manage our own growth, the growth of my company, the growth of our company, I should say, and we are then offering that to other people. So if you need support when it comes to not just planning your business growth, but to actually accomplishing your business growth, we would love to talk to you about our new business growth management services. I'd also invite you to sign up for our new Business Growth Acceleration Kit at paulhoyt.com/entrepreneur power. I'll leave that on the screen here for a little bit. It's http://paulhoyt.com/entrepreneur power. So go to there and sign up for the new 5 Choices campaign. You get my new presentation that I created called The 5 Choices of Winning CEOs, an article on raising capital that will complement this presentation today on pitching to investors, some samples of the inspirational works that I create, a free business clarity session, that's a half-hour session with one of our senior consultants, and some surprise bonuses that we have going down the way as well. And I think the value to you from just this program itself can be significant and quite enormous. We've had people gain considerable value out of just this business clarity session and out of our 5 Choices campaign. So I encourage you to get your business growth acceleration kit by going to paulhoyt.com/entrepreneur power and signing up for yours today. When you're ready, let me go back. When you're ready, I invite you to purchase our Beyond Business Survival CEO Education Training Program. It's what you need when you're the CEO, where we talk at length for several hours about business success principles that I know will save you $5,000, $10,000, or more, and it will help you avoid making those mistakes that slow you down or shut you down in business. Our next office hours presentation next week on September the 15th is going to be on the future of management. I had a client strongly recommend that I read that book, which I did over the weekend, and so now I'm going to give a presentation to you next week on the future of management. If any of you out there have read books that you really think were phenomenal and that you gained a tremendous amount of insight from, please share those with me and other members of the brilliant business community. And if I find it to be something that I think would be of interest to everybody, I'll read the book and figure out a summary of that book and and talk about it on a future office hours presentation. If there are other subjects that you'd like for me to address, you can go to paulsurvey.com and let me know. And in between now and the time we meet again, do your homework. Now I'd like to open it up for comments and questions on the subject of the day, and then we'll open it up to any other issues. Again, the contact information is there. You can go to schedulegrowth.com and schedule a meeting with one of my senior consultants. Stephanie, who's assisting me on the call today, is really a great coach and a great senior consultant that you can get on her calendar at schedulegrowth.com or on my personal calendar if I have time available at schedulepaul.com. So that's our presentation for today. Stephanie, do we have any questions?
Yes, we do. Let me see. Let's see. One of the first ones is, how does a pitch compare to a business plan? Good one.
They contain a lot of the same elements. In a business plan, there's an executive summary that you don't have time for in the pitch. In a business plan, there's typically more detailed financial projections that you don't have time to show in a pitch. Typically in a pitch, you only show like any sort of high-level projections that you might have. And of course, in the plan, there's a lot of elaboration. It should take somebody to read a 30 to 40 page plan. It may take them 30, 45 minutes if they read it through in detail, or a little bit less than that if they're skimming the plan. But generally, the components of a business plan and the components of a pitch are pretty much the same type of components. You talk about the market and the industry, you talk about the problem that you're solving, you talk about your progress, you talk about the products and services that you have and your product development roadmap. So the business plan becomes a formal document, a piece of paper or a PDF file that you send somebody. That's an elaboration of and an expansion of the components that you see in the pitch itself. So I think that's how the two compare. Next question, Stephanie.
Okay. Will having a great pitch guarantee my success?
Absolutely not. There's no way that having a great pitch is going to guarantee your success at all. What having a great pitch can get you is that next meeting. Especially if it's one of these 5-minute, 6-minute, 7-minute pitches that are really common, what you're really closing for there, what you really want as an outcome of that is a private one-on-one meeting with folks. So having a great pitch at a private one-on-one meeting also won't guarantee your success, but it really will facilitate your success. The bottom line is, without a great pitch in front of an angel group, you're never going to get that private meeting. And without a great pitch that's private and formal or private and informal, when you're talking to people about the opportunity they have to write a check to you right now today, you're not going to get the business. So it won't guarantee your success in raising capital, but I think it's really critical. I think it's necessary, but not sufficient. What's sufficient is having market traction, about having good people on your team. So you can have a high-quality pitch, a high-quality presentation, but if it doesn't have the content in it, if the audience really doesn't think that you're addressing the marketplace, or they don't like the marketplace, or they don't think that your team has the capability of actually pulling off what you want to pull off, then they're not going to write you a check. So you have to have a great pitch, but you also have to have great content, and you have to have progress, and you have to have sophistication. There's a lot of components that are necessary in order for you to be successful in raising capital. And having a great pitch, well, that's just one of those necessary components. Next question, Stephanie.
Oh, this just came in. Can you, hold on, can you help me with the strategy needed to, can you help me with my long-term strategy then for my pitch and for all the different steps then in raising capital with the venture, in the plug and play and the other venture groups?
Yeah, absolutely, and that's what I've done for a number of years. As most of you know, it's been my pleasure to be a member of the CEO space community for the last 10 years. So I've worked with hundreds of business owners, CEOs, and entrepreneurs who were thinking about raising capital. So many of them were raising capital, and many of them were not raising capital. But for those who have raised capital, that's what we do. We help you develop a long-term growth strategy, write a business plan, and develop financial projections if that's what's necessary for you, to develop your pitches, both your informal pitches, your formal pitches, your long pitches, your short pitches, your snaps, your elevator pitches. All of that is stuff that we do to help you be more successful. And as we talked about, on the call this morning, I had an opportunity to talk to a client over the weekend and again last night who is going to a major pitch event here in Silicon Valley called TechCrunch today and needed help, with his grabber and his headline and the pitch itself. So we spent some time last night, and I've been known to work on weekends and the evenings too. Not every weekend and not every evening, but sometimes if that's what's required to support the client, then sometimes I'm kind of an emergency room when it comes to handling a business issue, which is what we were last night and this morning. So I'm thrilled to have the opportunity to talk to people about how we can help them set strategy, develop their business plans and financial projections, work with their securities attorneys to do the capital engineering, help them develop their pitches, and walk with them, hold their hand through the process of raising capital. So thank you for that question. Next question, Stephanie.
Okay. Aaron is sending a question. On the last slide, the slide said execution, but you said education. Are you talking about execution and not education? That's a good one.
I apologize if I misspoke on that. Let me see if I can go back to that slide here. I think I can get back pretty quick because it was close to the end. Was it this one where we talked a little bit about execution? And the intention of this slide was that, it's nice to have an idea and it's great to have a plan, but 97% of the work that you have to do is in the day-to-day actually executing the plan that you put into place. So that may have been where I misspoke. If I said the word education there, what I meant was execution or implementation or managing the growth of your business, which is a new offering that we created here just in the last few weeks. So I'll go back to the last slide here. Oops, there we go. Did that clear that up? I'm not sure if it did or not.
Yes. Okay. Okay, good. The other thing, what's the best way to guarantee my success in raising capital?
There are no guarantees, but I'll tell you what the best attitude is. I had a client last year just ask me that question, how long is it going to take me and how many presentations should I give? And I said, I think you should plan on giving between 200 and 250 capital presentations, and however long it takes you to raise capital will depend on how quickly you can deliver those presentations, the quality of the presentation, and the people that you're talking to. So let's talk about that for a second. 200 presentations, are you kidding? She gulped a little bit when I told her that. But no, I'm not kidding at all. If you have 200 presentations and you have a 10% closing rate, that means you've got 20 investors. And if those 20 investors put in $25,000 each, that means you've raised $500,000. $500,000 is pretty good. If you're going to have a 10% closing rate on 200 presentations to raise $500,000, that means that if you're giving one presentation a day, that it's taken you 9 to 12 months to do that. And that, by the way, is a realistic scenario. If you're raising $1 million or $2 million or $3 million and you're getting it only $25,000 or $50,000 at a time, you're going to have to deliver a lot of presentations. Now, your closing ratios will probably be a little better at start because you're talking to family and friends. Then they'll probably go down a little bit, and then as you begin to be polished, as you make progress and you increase your sophistication in your business and you are much more comfortable doing the pitches, and as you have other investors who have already invested in those, everything that you do with progress and sophistication makes you more attractive to other investors. So I expect it to be, pretty good success to start out with, and then the success to fall out as you begin to make your presentation to people who don't know you, and then to have your success increase over time. And hopefully you can get to something much greater than a 10% conversion rate or a close rate. Maybe you can get to 20 or 25%, and maybe the investors will be $25,000 or $50,000 or $100,000 investors, so that you can get to that $1 million in capital raised in something short of 18 months. It's really, really helpful to get there within 6 to 9 months, because oftentimes, especially if you have a high-tech product, your window of opportunity can pass you by pretty quickly while you're trying to raise capital if you don't have a really good pitch and you don't have really good progress and sophistication. So generally, that's the time frame. Nothing's going to guarantee your success except for your persistence. And even then, as I say, I don't think that belief and persistence will guarantee your success. I've seen a lot of people bang their head against a brick wall time after time after time. And if the dog won't hunt, if the investors just aren't interested, if the people just won't buy your products and services, then it's time to move on to a different opportunity. Nothing will guarantee your success, but there's a lot of things that you can do to increase your probability of success, and persistence and practice and hard work, your belief in yourself, having quality presentation, getting good people on your team, having good coaches and mentors, getting the education, the training, the coaching and consulting you need will all increase your probability of success. Next question, Stephanie.
We got a couple of comments here. Darlene says, I can vouch for that. Did hundreds of presentations to raise the $1.5 million that she did.
Congratulations. Go ahead.
Yep. Chuck says, raising capital is like sales. So true. So the final concept applies. You have to make a lot of pitches.
Yeah. Yeah. There are different stages in the sales cycle, and I'm a big fan of stage selling and sequence selling. You have to send out a lot of emails or make a lot of phone calls in order to get the appointments. You have to make a lot of appointments or attend a lot of appointments before you can find qualified prospects. And you have to make a lot of pitches to qualified prospects before they become customers, or in this case, investors. So it is a numbers game, and the practice that you have along the way and the sophistication and progress that you can demonstrate will all contribute to your success. Next.
We've also got a question.
Okay.
We've got another question. Sean is asking if there's anyone on the call who can share a successful investor win situation.
We'll invite people to raise their hands on that. I think the most successful one that I know on the call is Darlene, but I'm not sure. I'm not sure if she's in a position to be on the, to come unmuted and talk about that or not. She's also actively raising capital at this point in time. So, Darlene, if you choose to say anything, these presentations, I think, are going to be open up to the public at some point in time. So I would caution you not to say anything about your particular offering.
She says that she can chat.
Okay. I'll take you off mute here, Darlene, and invite you to share, especially with regards to your comments about the number of presentations that you've made. If you can talk about the number of presentations and amusingly enough, the different places where you have made those presentations, go right ahead.
Hi.
Hi, Darlene.
Well, yes. Hi, Paul. Thanks. Creativity in making the presentations is very, very important. I had a 506 Reg D offering, so I could not make presentations for capital to people that I didn't have a personal relationship with. So you have to do some events to get people together so that you can form a relationship with them, and I think the law is 30 days. The most important thing is to know the securities laws, and for me, I'm very grateful for CEO Space because they have 3 days of compliance classes 5 times a year that you can go and learn what those things are. So being aware of the issues and what I could say and couldn't say, there were basically informational presentations where we have a unique way of doing it in that we talked about the other investors that invested, never directed the pitch directly to the audience. So therefore, we were never in violation of SEC law because we were never asking or presenting an offering. We were just saying, well, this is how we're structuring the this is how we're going to be doing it, and this is how we're going to be raising the capital. And I just had an investor last week say that they invested because of this, this, and this. Well, that compels people to come up to you and ask you if they can invest at the end, but you don't ever say to them, will you invest? And that way I got around the whole thing about making an offering. I'm not currently right now doing a capital raise though, Paul.
Oh, excellent.
Yeah, I'm actually doing a crowdfunding campaign, which essentially for my new resort is like I'm acting in the role of a tour operator, pre-selling packages into the resort.
Excellent.
So it's not,
yeah,
it's not ownership.
I remember that now. I didn't know if that was in association with an existing offering or whether it was the only thing that you're doing. But yeah,
No, I don't. Sorry, I don't have any current offerings, but I did a seed round and a first round on Isle of Love.
Great. Well, thank you very much for jumping into the call and sharing that with us. Yeah, she's been especially creative in the ways that she's had presentations and delivered her presentations to potential investors and potential crowdfunding participants too. So my hat's off to the creativity that I've seen come out of Darlene. So I'm going to put you back on mute, Darlene. Okay.
Okay.
All right.
Bye.
Thank you very much. And we do have 1 o'clock. It is the top of the hour, so I'll open it up for one more question, Stephanie, if you have one. If you're speaking, I can't hear you. Hello, Stephanie. Well, I'm going to assume that Stephanie's having a little bit of problems in the communication. Then, if you did have,
I'm sorry.
Okay, there you go. You have one more question for us.
How did the pitches at Plug and Play go?
Oh, the pitches at Plug and Play. Thank you for asking that. They went great. Because of the way that we did the pitch. With the two of us up there, with me doing the attention grabber and the headline, and and the gentleman who was the founder and the CEO of the business delivering the body of it, and because of the strength of the business opportunity itself, we were voted the most popular of all the 22 pitches that were made. We had literally a dozen companies and angel groups come up to us afterwards and request a private meeting, including an opportunity to make a pitch in front of the most successful and largest and most reputable angel venture capital fund in all of Silicon Valley. So it was a huge success. And again, I attribute part of that success to the quality of the pitch that we prepared and the way that we practiced it and the way that we delivered it. And that's 10 or 15% of it, but a good 80 or 90% of the success of the pitch was the CEO and who had been working on this project for 20 years and had made a significant amount of progress, and it's disruptive technology, and it's is really a great pitch. But thank you for asking that, because I was very excited to have the opportunity to present in front of or pitch in front of Plug and Play Technology Center for the first time, and very excited with the results indeed. So my wish for every single one of you is that you would develop a winning pitch, that you would get a chance to practice that pitch and then deliver that pitch in front of lots and lots of people who have lots and lots of money. And if there is any way that we can support you in that, in developing strategic plans, financial models, business plans, the pitch itself, helping you rehearse that pitch, prepare that pitch, we'd be honored to have that conversation with you. This is Paul Hoyt, and until the next time that we meet, I'm wishing you a most marvelous and prosperous day. Bye-bye.